Good morning, it's Monday the 26th of September and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights to keep an eye out for. As always, we'll start with a quick rundown of the key economic numbers being issued this week around the world's markets, and we'll then dive into some of the more significant highlights afterwards with our own thoughts and analysis. So without further ado, let's get straight to it. So the economic numbers being issued this week start today with the release of the IFO business climate in Germany. On Tuesday, we'll hear the latest US durable goods and US home sales. On Wednesday, we'll get the latest minutes from the Bank of Japan's last meeting, the GfK consumer confidence numbers in Germany, and the EIA crude oil stockpiles. On Thursday, we'll hear the eurozone economic sentiment, German inflation, US GDP for the second quarter, the initial jobless claims, and the Canadian GDP figures. And finally on Friday, some key numbers being issued this week, including the latest GDP figures here in the UK, inflation in the eurozone, and core PCEs in the US, each of which we'll discuss towards the end of today's video. Also on Friday, China manufacturing and services PMIs, German retail sales, and the US Michigan consumer sentiment. And the companies that we'll hear trading updates from this week are as follows. Well, Tuesday we'll hear from Ferguson, Close Brothers, Saga and BlackBerry. On Wednesday, online fashion retailer Boohoo are due to release their interim results, and we'll give our thoughts on this in more detail afterwards. On Thursday, Next are due to release their half-year results, Nike are due to release their Q1s, and Micron Technology is due to release their final quarter results. And we'll discuss each of these three afterwards. Also on Thursday, we'll hear from H&M and Bed Bath & Beyond. And finally on Friday, we'll hear from Dignity. Well, last week there were several key events that brought some serious volatility to the markets. Central banks such as the Bank of England, Sweden's Riksbank, Switzerland's National Bank and the Fed all hiked interest rates, and Fed Reserve Chair Jerome Powell doubled down on the hawkish rhetoric. The UK Chancellor Kwasi Kwarteng announced the mini-budget with a level of unfunded tax cuts shocking the market, sending the pound to a fresh 37-year low below $1.10. Well, this week is likely to see the market continue digesting these latest developments amidst a slightly quieter economic calendar. So let's take a look at this week's biggest stories in more detail. On Monday, Germany released their latest IFO business sentiment figures. German business confidence showed signs of steadying in August, with the IFO business sentiment index slipping to 88.5, and that's down from 88.7 in July. However, inflationary pressures in the Eurozone's largest economy are rising, hurting the outlook further. Expectations are for the IFO business sentiment to slip further in September. So as a result, do keep an eye this week on the Euro and the DAX. On Wednesday, online fashion retailer Boohoo are due to release their interim results. Shares in the company have fallen to the lowest level in 6.5 years as the company struggles and the outlook remains pretty weak. Q1 sales fell owing to tough comparison, but should have returned to growth in Q2. Analysts forecast that Boohoo will report a 2.2% annual fall in revenue in H1 to £954.6 million, and adjusted EBITDA will tumble 47% to £44.9 million. While Boohoo will be hoping for a stronger second half, that could be somewhat optimistic given that retail sales fell dramatically in August, suggesting that the UK consumer is struggling. Guidance is undoubtedly at risk of being revised lower, with investors doubtful over its outlook. Boohoo is one of the most shorted stocks in the UK. On Thursday, bellwether Next is due to report their half-yearlies, with results coming as the share price trades 30% lower across the year so far, even as earnings have actually held up reasonably well. Investors are ditching retailers indiscriminately, regardless of their performance. The last we heard from Next in early August, full price sales were actually up 5% and an impressive £50 million ahead of earlier guidance. In-store sales have recovered well as online sales have reverted back to their longer-term trends. Next raised the full-year profit outlook by £10 million to £860 million. However, retail sales in August fell sharply, which could mean Next needs to revisit full-year expectations. Well, Thursday the 29th is also the day that Volkswagen is looking to float Porsche AG shares on the Frankfurt Stock Exchange in what's gearing up to be one of the largest IPOs in Europe. The luxury car maker could be valued as much as 75 billion euros, with shares priced between 76.50 and 82 euros 50. Although this is actually slightly below the initial target valuation of 85 billion euros. Porsche's debut will lift the IPO drought, which has been hanging over the markets for quite some time. And Micron Technology's fortunes have changed dramatically in the final quarter of the year, with Wall Street forecasting an 18% fall in revenue year on year to $6.8 billion and earnings per share to tank 43% to $138. This is in stark contrast to double-digit revenue growth and even stronger earnings growth over the years. Weaker demand for smartphones and consumer electronics, which account for around 50% of sales, are expected to hit hard this quarter. Furthermore, there are fears that businesses could start reining in their IT spending, of course hurting the outlook further. And finally, on Thursday, Nike are due to report their first quarter of the year's results. The company reported stronger than forecast results in Q4, despite wide-ranging headwinds. Lockdowns in China hurt demand, with sales falling 19%, and resulted in inventory issues, while the war in Europe, of course, led to store closures. Even so, revenue came in at $12.23 billion and profits hit earnings per share of 90 cents. And Nike announced a 4-year, $18 billion share buyback. In Q1, Nike said that it expects revenue to be approximately in line with or slightly up from last year, despite ongoing headwinds in China and rising costs. Profits expected to be earnings per share of 95 cents. Well, Friday's an important day for several key numbers, starting with Q2 GDP here in the UK. After expanding by 0.8% quarter-on-quarter in Q1, the UK economy contracted by 0.1% in Q2 in the initial estimate. As of the second quarter, economic performance has deteriorated amid surging energy prices and the deepening cost of living crisis. Energy costs rose 54% in April, which put pressure on household budgets and led to a contraction in personal consumption. The service sector also contracted sharply as spending on health slowed amidst the improved COVID picture. Looking ahead, the UK economy is expected to shrink again in Q3, with the Bank of England saying that the UK was already most likely in a recession. That's 2 consecutive quarters of contraction. Next up on Friday is inflation in the eurozone. Well, inflation in the zone rose to a record high of 9.1% year on year in August, and that's up from 8.9% in July. Core inflation, which strips out the more volatile items, also rose to 4.4% year on year in August, and that's up from 4%. In September, headline inflation is expected to increase further to 9.5%. However, core inflation is expected to rise to 4.7%. In Germany, the rise in prices shows no signs of slowing after PPI surged to 45.3% year on year, suggesting that consumer prices could rise higher. After raising rates by 75 basis points in September, another hot inflation print could see the central bank leaning towards another 75 basis point hike, particularly after the Fed's jumbo hike. And finally, for the week, the US will report its latest core PCE figures. Well, PCE fell to 6.3% year on year in July. That's well below the 7.4% forecast. However, core PCE, the Fed's preferred gauge for measuring inflation, cooled only modestly to 4.6%. That's down from 4.8%. On a monthly basis, it rose 0.1% in August. In September, core PCE is expected to rise 0.3% month on month. Meanwhile, personal spending is also expected to rise 0.2%, suggesting that inflation is unlikely to be cooling as quickly as the Fed would like. The data is likely to support the Fed's hawkish position. So, those were the big stories of the week. Let's wrap up with a quick look at the dividend announcements due out this week. In the FTSE 100, we'll hear from British American Tobacco, Smurfit Group, Smith & Nephew, Rightmove and Barratt Development. And in the FTSE 250, we'll hear from Hayes, Finsbury Growth and Income Trust, Games Workshop, Petershill Partners, Hypnosis Songs Fund and the LXI Real Estate Investment Trust. So there you have it, a slightly quieter week this week as the markets cogitate over the ubiquitous rate hikes last week as their own economies stand on the brink of various states of recession. A mighty balancing act that is going to tax the minds of some of the brightest over the coming months. And talking of tax, at least ours will be falling at last here in the UK, creating perhaps a long overdue policy division between the two sides of the political divide. Have the Conservatives returned to genuine Conservative policies after so many years? And if so, is this going to indeed generate the economic growth that will lift the country out of its recession. Time will tell, but we're here, as always, at Atlantic Capital Markets to guide you through whatever the future may hold. So, as always, thanks so much for watching, and don't forget to click on that subscribe button to make sure that you don't miss out on our regular financial updates with our expert market analysis and opinions. Also, if you haven't tried it already, why not download our app to your phone or your tablet if you want to keep updated on the latest financial news, as well, of course, as our award-winning trading signals. So, until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.